Good afternoon, everybody. Welcome to Tech Talk at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we break down the charts and the options prices. We'll give you a forecast of what potentially could happen based off of what we've seen happening. And today what I wanted to do is break down some of the sector ETFs that are on the move with the latest headlines that have been coming out. Again, it sounds like healthcare is on life support. We're waiting for some sort of tax reform. President Trump is meeting with the Prime Minister from China or President from China over the weekend down in Florida. And I am stuck here in Chicago in monsoon season, so let's get down to it. Let's take a look at energy. Energy has had quite a bounce. We've been talking about crude. A smaller than expected build in Cushing in our storage from the EIA yesterday. So we've seen crude on the move in spite of a strong dollar, and we see energy on the move. If you take a look at the ETF XLE, that's the energy ETF, you currently see that it has overtaken its 20-day moving average. It had settled above and now is trading above off of its best levels today. Taking a little breather, challenging that 200-day moving average. So what does that mean? That means that people that have held the stock for over 200 days, if they haven't been washed out, they're watching this level very closely. They want to see that beat. So short-term bulls, they're catalyzing to the upside in spite of the dollar strength that we've seen. It's gotten a little bit weaker as we get into the close. But XLE is pricing in a 30-cent move between now and the close of business tomorrow on this $70.38 underlying. That's basically about a 0.4% move being priced in right now between now and tomorrow's close. We'll watch that one very closely. Now, implied volatility rank is very low, so there's not a heightened expectation of violent moves. Even though we've seen some big ones in XLE, it's only got an implied volatility rank of 13. So on a scale of 1 to 100, or 0 to 100, 13 is on the low end of the scale, so we're not expecting any violent moves going into the close tomorrow. Now that, of course, could always change with any headline. We want to take a look at finance, so you can take a look at XLF, the ETF that tracks finance. It has recovered quite nicely after a pullback dramatically last week and then a grind. Obviously, the healthcare reform and now with tax reform on the docket, the finance area has been under pressure because bonds were on the move. Bond prices went up, yields went down, finance went down. That's what we see on this chart. Right now, they're challenging the 50-day and the 20-day moving average right now on XLF. So the banks and small banks and large banks and other financial institutions, they're driving the market to the upside right now. Bonds have firmed up as far as yields are concerned. Prices have come off, so that safety trade is being unwound a little bit. That equity could be moving back into the markets. This is a battleground here. XLF options are pricing in about 11 cent move right now between now and tomorrow, the close of business tomorrow, in this $23.94 ETF, which is up 32 cents right now. That's basically about a 0.5% being priced in to the stock as far as a range tomorrow. The implied volatility rank is still very low. What is that telling you? It's at 14, folks. That's telling you don't expect big violent moves like we've seen in the previous sessions. Looks like it's going to be potentially getting a little grindy towards the tail end of this week, tomorrow, which is the last trading day in March. The next ETF I want to take a look at that has been on the move is XLI. Now, these three sectors that I've covered so far have been what we consider offensive sectors. These are sectors that are going to benefit from a lot of the Trump plays that people had put on post the election. You see right now the industrials, XLI, up 0.4%, almost 0.5%, up 32 cents right now. It has retraced its 50. It held its 50-day after it retraced it yesterday, and it is now broken through. Let's see if it settles above the 20-day. That means the intermediate and short-term bulls, they're starting to take back their momentum to the upside. XLI is pricing in a 31 cent range in the $65 underlying. So you got about 0.5% being priced in as far as range going into the close of business tomorrow. Again, the implied volatility rank at 21. That's on the lower end of the implied volatility rank curve. That's telling you don't expect big violent moves unless we get an unexpected headline. But right now, that's not being priced into the stock. Taking a look at the utilities, XLU basically has pulled back right now, broke through today its 20-day moving average. That safety trade that has been pretty much so, the yield trade and then the safety trade basically pulled off after we started getting a little bit of transparency into the fact that, well, okay, yes, maybe healthcare is on life support, not going to happen. Tax reform and corporate, both personal and corporate tax reform, that's what everybody's looking for. We're going to see if that's going to happen. XLU has pulled back. It broke its 20-day moving average. That means that right now, short-term bulls are under pressure in the utilities. Anybody that's been in it in the last 20 days is now under pressure, could be cutting some ties there. Stock's down almost 0.8%, down 0.74%. Right now, XLU is pricing in a 21-cent range, so you're talking about right around a 0.5% range being priced in, and implied volatility rank is at 16. IYR. I want to take a look at housing and real estate, because with the move in interest rates, real estate was under pressure. You saw that rates were, the yields were coming down, prices, bond prices were going up, uncertainty about all of these different components that were going to drive growth in the economy were under pressure after the vote on healthcare basically disappeared. But we've seen that the retail segment, after the housing data came out, better than expected, both new and pre-existing numbers on housing sales came out, as well as housing data as far as builds are concerned. Right now, IYR is retaken its 50 and its 200-day moving average. We're right now at a precipice where real estate's either going to start moving to the upside with a little bit more of a bias to get up to that 79 level and challenge the long-term resistance, or we're going to start to get into a choppy market. Right now, volatility isn't telling me that. The implied volatility rank is right at 6.8%, very low, so we should have some pretty muted underlying moves. As a matter of fact, IYR is pricing in between now and tomorrow a 29-cent range, so that's roughly around 0.3%. And we've seen that it's already moved that much today, so let's see what it does in the close of business tomorrow. Now I want to take a look at XLY. That is the consumer discretionary ETF. Now, the consumer is the driver of the domestic markets and a huge driver of the overall markets. We saw that it challenged its 50-day moving average last week after the announcement that healthcare reform was not going to get pressed through or even voted on. It basically stayed in that battle zone, but the midterm and short-term bulls, they won that battle. Consumer discretionary is moving to the upside. We've seen a lot of interesting earnings results coming out from consumer names, most notably that the latest one was Restoration Hardware, a specialty hardware store. They came out, blew earnings away, moving up to the upside. The consumer is still alive. Right now, the stock's up almost 0.2% at 0.18% at 87.87. The options are pricing in between now and tomorrow a 23-cent range. An implied volatility rank is coming in at 23.4%. So it's still relatively low, but you have basically a 0.2% range being priced in either up or down between now and the close of business tomorrow. Something to keep on your radar screen, but still low moves being priced in, not a lot of volatility going into the end of the week. And then finally, we've talked about bonds, but let's look at them. TLT is the hybrid between the 10-year and the 30-year bond. They call it the 20-year Treasury bond ETF. It's trading down 91 cents or 0.7%, almost 0.8%. And right now, TLT is pricing in a 46-cent range. Right now, that basically would be about a 0.5% move. It's challenging its 50 and its 20-day moving average. It really moved up pretty nicely coming off of its lows over the last 10 days, but has been grinding down to the downside. Let's watch this. Any uncertainty that comes up in the marketplace, in other words, bond prices start to go up, yields go down, TLT is going to benefit from that. Right now, TLT's implied volatility rank is at 12%, very low, so not a heightened expectation of violent moves in the bond ETF pricing. All right, folks, that's it right now for Tech Talk, where we took a look at charts and option prices, gave you some transparency into where stocks could be moving, major sector ETFs could be moving going into tomorrow's close. Join me for the closing bell. I'm going to go over everything that's happened today. See you here at MarketStream.live.